So fighting continues across the Middle East as Operation Epic Fury enters day 4. Iran is striking U.S. bases and America's allies in the region, but the United States is hitting back by going after Tehran's military bases and naval headquarters. All eyes remain on the Strait of Hormuz, which carries about 20% of the world's oil, effectively right now at a standstill. But JP Morgan telling investors to take a big, deep breath and treat this as a buying opportunity, at least for the equity markets. The strategists over there are arguing that markets overreact to Middle East flare-ups only to rebound when cooler heads prevail. And President Trump says this shouldn't be long-term disruption.
I thought we were going to have a situation where we were going to be attacked. They were getting ready to attack Israel. They were getting ready to attack others. People felt it's something that had to be done. So if we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop, I believe, lower than even before.
So, Michael, we were looking in the last couple hours, and it looked sharply negative, at least on the headline indices. But you're starting to see, I don't know if this is dip buying, but certainly, as Dagan mentioned, cutting losses in half. I'm seeing a lot of stability within dollar in bond yields. Sure, there's some selling off within treasuries or gold, but it feels like we are not panicking. Do you agree? Do you look at this at least as a buying opportunity?
So, I mean, it depends where you sit. If you're 100% in cash and waiting for an opportunity to get in, then yes, I would put at least half that money to work today. If you're already invested and you got a little stuff on the sideline, you know, I want to see, I think days like we had yesterday and days like we have today, where the market starts out ugly and gets better throughout the day, that's what you look for in signs of a strong tape. And, okay, you know, if you go back like 75 years, 2/3 of the time, a year out from a geopolitical shock, the market's higher. The median is 7%, the average is 3%. Not a huge move, but I mean, it tends to make a lot of sense. If this is a short-lived conflict and the regime that ends up running Iran is much less, they're not looking for, you know,
not terrorists,
you know, not death to America, right?
Yeah, the bar is low.
It should make. Like, markets should bounce back from this, but there's some really interesting things going on in the private credit market. So BCRED threw up the gates today. So Blackstone's flagship private credit vehicle threw up the gates because of all the redemptions. So what that means is people requested a certain amount of money back, and they'll get a portion of it over time. So that private credit and kind of the debt capital markets with all these companies raising so much money for the AI data centers, that to me is the next kind of thing once we move past this. But we should eventually move past all that.
Okay, I actually want to talk about that. And Dagan, you've been in this private credit issue, and I did read that note here. They have blocked up, they have about $82 billion in private credit assets, but redemptions are picking up pace. And that echoes similar stories to what we heard from Blue Owl last week, where they effectively had to put in a gate. Basically, so many retail investors were saying, give me my money back. I'm so worried about your exposure to software companies that I'm going to actually halt that for now, or slow down those requests for now. Underneath the surface, and Iran is certainly a headline story, are there some cracks underneath the surface that are a little bit more concerning, even though maybe Iran is a buying opportunity, but that doesn't take away some of the software concerns that we had going into this?
There was the selling in a large number of tech names. Software is just one issue, and we'd been talking about since the middle of last year, the cracks emerging when First Brands blew up, Tricolor blew up, and the private credit problem becomes an economic problem because these companies that have borrowed at variable rates, that have gotten money via these private credit funds, they can't tolerate 8% yields if they have to refinance at 8 or 9, their debt at 8 or 9%. They're living in the fantasy land of very low rates, and if they have to refinance their debts, at way higher spreads, then you're going to get a cascade of defaults, and you're going to get a cascade of bankruptcies, and that's a cascade of layoffs. And I don't think anybody has really factored that into the broad markets yet, and the economy. That's one thing at play, and that was the reason that longer-term treasuries, the yields, that money had been flowing into treasuries, and yields had fallen so dramatically. So now you see a snapback because the dollar is weak, and there are concerns. And the yield's up 2 days in a row on the 10-year treasury, which is the opposite. It's like you got selling in stocks and selling U.S. treasuries, not a haven. But you also have to worry about the fiscal health of the U.S., because we're spending, like I said, this war, where Saturday, Sunday, Monday, 4 days in, it's at least $1 trillion. And it's economically stimulative. You blow up stuff over there and you need to make more munitions here, but we're borrowing money to do it. And it's not really creating anything other than something to be destroyed. So it's not good for a nation spending over $100 billion on interest on the debt every month.
Jackie, there are certain pockets where you could say that given this sell-off, and maybe it was software leading up to it, now maybe it's Iran, where things are starting to look attractive. Artificial intelligence, AI, and I do that for you and NVIDIA. Some say, look, it actually looks a little bit more reasonable given the big correction that we have. And look, the long-term fundamentals are still very much intact. With semiconductors, we talked about the massive memory chip movement. They're approaching historical averages from valuation. And yes, there's sort of this cyclical recovery that's expected. So there are pockets, but it can be dangerous to just buy in this market when you do have a lot of things going on.
Sure.
Maybe this is the time to be a little bit more selective.
I'm going to pick up where Charlie left off in the first block, where he said, barring anything catastrophic happening with the administration's plan here, if everything goes the way they want it to, which is they continue with maximum pressure, they continue to take out the leaders that they don't want rising up there to grab control again, that you sufficiently create a situation where you have disarmed Iran from nuclear weapons, I think this market is going to rip. So, nobody has the crystal ball to be able to look at what could or could not happen. It could turn very quickly. But I think there is an opportunity here, because I think back to the productive Iran that it was before the 1979 revolution, when the Shah had good relations with Israel and the United States, when it was a global supplier of oil, when there was a thriving textile market and business there. So much of that business and economy has been decimated by the mullahs, who basically lined their own pockets with the oil revenue and didn't allow the people to prosper at all. So I look forward to the economic story on the other side of this.
Yes.
That is not only a country-specific story, but it's a region-specific story, and then I think will be a global story too.
Brian, on top of all of these headlines, we heard from the president earlier, effectively talking about this conflict and using it to look at tariffs or not negotiate. Perhaps Spain is one of those. I want you to take a listen to what he had to say.
Spain has absolutely nothing that we need other than great people. They have great people, but they don't have great leadership. And as you know, they were the only country that in NATO would not agree to go up to 5%. I don't think they would have agreed to go up to anything. They wanted to keep it at 2%, and they don't pay the 2%. So we're going to cut off all trade with Spain.
I'll confess, I don't know what we buy from Spain. Do you know what we buy from Spain? I don't know. Like, I have no idea.
Is there good wine from Spain?
Maybe
Ham.
Ham. Okay. We're going to lose out on some ham, guys.
Iberico ham.
I don't know. Spain, I don't know what we buy from them. I just don't think it matters. Also, I am, like the president, sick of these European countries who are, like, when you need them, they're completely worthless, and they don't want to pay up to defend themselves. Okay, so we'll see what happens in Spain.
Can I just make a joke?
Yes.
Remember on Saturday when the head of the EU and all the leaders were like, okay, we're going to think about the war and get back to you Monday because we don't work on weekends. Continue.
Yeah, so like the weekend guys. We're losing the weekend guys. Okay, so I don't know what the next year holds, but I'm thinking about this like a decade out, okay? Just imagine, I think you were hinting at this. Imagine if the Middle East, a decade out, is not a constant source of worry for the free world, but an engine of economic opportunity. Imagine that. Like, it starts to neutralize Europe because there's a new source of vitality there. Like that, I don't think here's the thing about the president. Like, he's got lots of risks for the midterm doing this, okay? Yeah. Oil prices could spike and they could stay there. Cost of living could go up. This could get tricky for longer than 4 to 5 weeks. I get that. And I think a politician always wants to think about the next election. He probably is. But, man, he is doing a lot of things frequently that put the next election in jeopardy. But if you think 10 years down the road could be transformative. Venezuela is that, Middle East is. So I'm looking at this and, like, I know we're going to get gyrations in the market, but this is one of the biggest pro-growth possibility moves we have seen in a generation.
And I'll just add to that, the Iranian people are very smart, very hardworking. They contribute to society. Even the roughly 1 million people who have come into this country, legally rather, as opposed to illegal migrants crossing the border, are all members of society that contribute and do things. They are super smart when it comes to science, technology, medicine. I look forward to being able to see that innovation prosper and thrive once again, because it was stifled by these people. And why I'm adding that is because when you talk about the Europeans being lazy, these are not lazy people. These are not people that don't want to innovate. They want to contribute, and they will be able to
They
add
work
value.
in the month of August?
Yeah.
I want to talk about just quickly some news that broke a short while ago. If you look at the price of oil topped. Now, the selling in the stock market has eased a great deal. The losses more than cut in half. But the gains in oil have also come down quite a bit. And this is because this is based on Reuters reporting. One of the options that is going to be presented to the President of the United States by Chris Wright, Energy Secretary, and Scott Bessent, Treasury Secretary, is the Trump administration providing tanker insurance for oil tankers. Yep. Did we report that already?
No, but that's been speculation that they could do a backstop on insurance.
So providing, the United States has done this before during 1980 Carter administration, I believe, if my memory serves. Yes, I'm that old. Treasury, Trump administration considering providing or assisting in obtaining insurance for oil tankers crossing through the Strait of Hormuz. Policy options will be presented, helping oil tankers transit through conflict zones to obtain insurance.
Yep.
You know, there was movement. The IRGC said that the Strait of Hormuz were completely closed. That's not quite true. But supertanker costs in the Middle East have hit all-time highs, and there's very little, if any, crude flowing. But that is an incredible development.
That would help open up that choke point a
you
little bit.
could do oil tanker escorts as well. I did that in the mid-'80s. So, like, there are options on the insurance front.
So in the 80s, Washington reflagged tankers and provided naval escorts when private insurers withdrew coverage. And then even after the terror attacks on September 11th, 2001, the U.S. issued insurance policies to keep shipping moving.
Options.